Ladies and gentlemen, good day and welcome to the Nelcast Ltd Q4 and FY’25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Abhishek Bhatt from EY Investor Relations. Thank you, and over to you.
Thank you. Good morning, everyone. On behalf of Nelcast Ltd, I welcome you all to the company's Q4 and FY’25 earnings conference call. You would have already received the results and investor presentation, which is also available in our filings with the exchange. To discuss the company's business performance during the quarter and outlook, we have with us today Mr. P. Deepak, Managing Director and CEO, and Mr. S.K. Shivakumar, CFO of Nelcast. Before we proceed to the call, a disclaimer. Please do note that anything said on this call during the course of interaction and in our collaterals, which reflects the outlook towards the future or which should be construed as certain forward-looking statement, must be viewed in conjunction with the risk the company faces and may not be updated from time to time. More details are provided at the end of the investor presentation and other filings that can be found on our website, www.nelcast.com. Should you have any queries or need any further information at the end of this call, you can reach out to us at the email address mentioned in the company collaterals. With that, I would like to hand over the call to Mr. P. Deepak. Thank you, and over to you, sir.
Thank you, Abhishek. Good morning, and thank you all for joining today's call to discuss our performance for Q4 and FY’25. FY’25 has been a year of mixed experiences for us. We celebrated the 40th anniversary of Nelcast, and we also saw a robust recovery in performance during Q4 of FY’25, following a period of consolidation. The first 9 months of FY’25 were challenging due to the macroeconomic events that were happening world over and in India, but we managed to weather the storm. However, Q4 FY’25 brought a significant rebound in both our top line and bottom line, along with enhanced operational profitability and a positive trend in our export business. We are optimistic that this growth will continue in the future. On the exports front, we have demonstrated strong performance with a remarkable 21% year-over-year growth in Q4 of FY’25. Currently, we do not anticipate any significant risks from the tariffs that are imposed by the US, which is a major market for our exports. While there has been a lot of news about the duties, we strongly believe that the duty, as applicable, will be borne by our customers and resulting in minimal impact on us. Our existing business will continue without any major disruptions. Our customers are not halting their new projects either. We have made also steady progress in Europe. 4 new customers have started the process of approving our plants, which include fairly stringent audits. This is an investment in time and resources by these customers and communicates serious interest. These are significant advancements, and we are optimistic that these relationships will lead to new business opportunities in the coming months, further strengthening our position in the global market. In terms of product development, we are entering an exciting phase. We have several innovative products in the pipeline, each at different stages of development. One of the key things to note is we are developing a new high-value product that weighs nearly 500 kg, which marks a significant advancement from our current product range. This type of products will encounter minimal global competition and command high realizations, as there's only a few players worldwide capable of manufacturing such products. This unique position provides us with a distinctive competitive advantage and enables us to capture meaningful market share as we ramp up production in this new segment. This will also add diversity to our exports with more off-highway, in addition to the commercial vehicle and light vehicle that we are already in. Looking ahead, the company is seeing promising signs, and we believe that the growth momentum will continue, leading to a strong year ahead. Our confidence is supported by a robust order pipeline for value-added products, which will drive growth and enhance profitability, bringing us closer to our goal of achieving that EBITDA of 15 rupees a kg. Many of the new products will be produced at the Pedaparia facility, which will significantly improve our utilization in FY'26 and further enhancing our return ratios in the future. We're very excited about the coming years, diligently working towards our goals, and we are expecting substantial growth ahead. Thank you, and I look forward to our continued success. Lastly, commenting on the financials, the total income for Q4 of FY'25 was at 334.4 crores compared to 299.2 crores in Q4 of FY'24, and the total income for the year stood at 1268.8 crores compared to 1281.2 crores. The exports for FY'25 and FY'24 were both 445 crores. The EBITDA for Q4 of FY'25 was 34.3 crores compared to 19.3 crores in Q4 of FY'24. For the full year, EBITDA stood at 105.6 crores versus 106.5 in FY'24. And profit after tax during Q4 of FY'24 was 13.5 crores compared to 5.1 crores in Q4 of FY'24, and for the full year at 37.3 crores in FY'25. Thank you. I will now open the floor to any questions you might have. Navya, we can now open the floor for any questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Raman KV from Sequent Investments. Please go ahead.
Hello, sir. Can you hear me?
Hi, we can hear you. There's a little bit of background noise, but we can hear you. Yes, sir. Please go ahead.
Now can you hear me?
Yes.
Okay. So I just wanted to understand what is the current capacity and at the company level, and what is the capacity utilization?
Sure. So the current capacity at the company level is 160,000 tons a year, and I think what is a fair expectation of what can be achieved is maybe about 80% of that. Currently, if you see for the year, we were at about 83,600 tons. 83,600.
Okay, sir. So I just follow up with this. So you said the EBITDA per kg will increase from 14.5 to 15 in the coming year. So will it be driven mainly by the increasing the capacity utilization, which is currently at almost 52%?
So I think the move towards the 15 rupees per kg that I was talking about is, I think if you look at it from a full year perspective, right, not just the quarter perspective. I think from a full year perspective, we were at about a 12.63 for the full year. That's the number that even though the fourth quarter was a better quarter, I think we look at stability over a longer period of time rather than one quarter up and one quarter down. So that's the number that we want to achieve for the full year going forward in the near future.
For the full year, as in like for FY'26?
I think that it would be our goal, but certainly, I think we believe that somewhere around FY'27, that is certainly what we have been communicating, and we're still confident that we're on that path.
Achha, 15 per kg will be by FY'27, right? So, and the second question is, also what percentage of total revenue is your value-added product as of now? And going forward, what's your aim let's say about 2-3 years down the line? How much are you trying to increase the contribution of value-added products?
Yeah, so I think there's very different ways of defining value-added product in terms of the complexity of the product that we are doing. I would say that there's and it's not a binary thing where you say something is value added and something is not. It's a scale, right? Some are slightly complex, some are incredibly complex. So I think it's more about just an overall move towards the more complex parts, right? And we see that happening in two ways. One, with the new business that we are winning, both for the domestic and the export sector. But the second is also the existing products, as the customers are trying to optimize the designs, some of the existing products which might not be as complex are getting, one or two levels higher up on that complexity scale as we are trying to optimize the design, which I think is a big advantage for us.
And sir, my final question is with respect to the energy cost saving, which you mentioned that you will be using the solar, you are planning to install solar plant, which will help in cost optimization. And when it comes to power and fuel as a percentage of total revenue for FY'25, it was around 10.4%. So going forward, can we expect this to reduce to by 100 bps?
So this one, so when we look at our, power consumption, obviously energy is a pretty big part of our cost after raw material, right? And this is, I think, fairly obvious because we are melting iron at a temperature of about 1,500 degrees Celsius. So given that, energy is going to be a big chunk of what of our costs. We have worked quite closely for obviously many different reasons. One, of course, being the fact that this is the biggest impact that we believe we have on the planet from a sustainability standpoint, and we've managed to reach about 65% renewables. We would like to increase this number from the 65% to 80%, and we would like to do this parallelly. We would also like to be increasing our production. So I think that increases quite a bit in terms of what we will be doing in the future. But we will also have, in addition to the new investments coming online, we believe that our capacity utilizations also will go up, and therefore will also require further investment. So it's difficult to pinpoint to a number on this, but certainly this is an area that we are focused on.
Can you give any guidance with respect to the capacity utilization in the coming year?
Yeah, so I think it's hard to give a clear guidance, but we believe that we will be moving because it depends on how the overall market is going to look like. But we believe that we should be able to get to a number that's perhaps 20% higher than the current year, right? Than FY'25. With what we believe that we expect to see in this year, based on the projections that we have right now from our customers, is we'd be targeting about a 20% growth this year.
Okay, sir. Thank you, sir.
Thank you.
Thank you. Next question is from the line of Vidit Shah from Spark Capital. Please go ahead.
Hi, thanks for taking my question. Just firstly, to clarify, this 20% higher number that you mentioned previously is on volume terms, is it?
Correct, in volume terms.
Got it. So my first question was, our margins have been fairly volatile over the past 2 years. And my understanding was that we pass most of the cost, raw material cost fluctuations to the customer. So I understand that the shift in mix towards export and domestic is a little bit of a driver, but particularly this quarter, we've posted really strong margins at 14.8, whereas the export mix hasn't changed materially. So could you just help me understand what is causing this volatility and how do we look at margins going forward?
Yeah, so I think, from a volatility standpoint, so part of the reason I was also clarifying kind of on a stable annualized basis is I think, if you look at the year as a whole, there might have been, variations that were there in raw material prices that do get passed through at a lag, right? So the lag effect does have, positive and negative consequences of it. So that's why we look at it, when we look at it over a period of a year, especially this year, it was a reasonably stable year, from beginning to end, even though there were a few moves that happened through the year. So I think it's that's one, talking about the margins for the year and some volatility in the margins, right? Because it's not only the raw material prices that are getting passed through, it's also the freight costs that are getting passed through on the export front, right? So there is a little bit of a lag effect that's there. Coming to the performance of the fourth quarter and the better numbers, part of why we believe that this was a good quarter was because we did see that rebound in exports compared to the third quarter. Third quarter, I think, primarily driven by U.S. elections. There was quite a bit of a slowdown in our demand for the products into the U.S. So there was in the third quarter quite a bit of slowdown, and I think what we saw in fourth quarter was more a return to normalcy from that front. Right? So if you look at it in terms of the growth, the biggest chunk of the growth, whether you look at fourth quarter of last year or third quarter of this year, with respect to the fourth quarter of this year, the biggest jump has happened in terms of the export, right? And that's helped also drive the margins up a little bit.
Okay. Got it. I think with your export versus third quarter of this year versus fourth quarter of this year is broadly flat, right? I mean, I think the growth in exports is about 5% and margins have, shot up by about 3 rupees per kilo. So, is that...
Third quarter versus fourth quarter. Third quarter export sales had actually come down quite significantly because of, I think, primarily led by, some uncertainty around U.S. election. So they were down to about 90 crores, whereas in the fourth quarter, they're up to about 128 crores, 128.8, yeah. So there's a very significant jump between third quarter to fourth quarter on the export number.
Got it.
So for the full year, it was flat, but on the third quarter was really, had a big slowdown, and the fourth quarter had a big jump up.
Understood. And the new the high value product that you mentioned in your opening remarks, the 500 kilo product, any further color you can add to it in terms of its use case? I know you said it's a off-highway product, but the sort of demand or the market size that we have and the competitive strength globally, intensity globally.
Yeah. So that product is the end use of the product is in a tractor and the high-end tractors. So these are the tractors that use tracks instead of wheels and tires. The customer that we will be supplying to is located in the US, and they will assemble the entire axle and supply the axle to their end customer. So this is an existing product that's already running with the castings being made either in some of the cases in China and in some of the cases within the US. So this is a kind of resourcing to us. And I think in total they are looking at, pretty good volumes, I think, for a product of this size. And yeah, I think it will be a fairly good business for us. We're looking at samples within the next 3 months of the full range of products. It's not just one single part. So of the full range of products will be over the next 3 months or 3 to 4 months. We will be submitting samples to customers, and we expect to be in production around the end of the year.
Got it. And if you could just help us understand the cost differential between, manufacturing and Nelcast versus China and the USA, given that the tariff environment is still a little volatile and uncertain, would be just great to understand how much cheaper we are compared to the US and China in terms of manufacturing.
I think in a product like this, these kind of products, I'm quite certain that there would be at least a 30, if not a 40% price differential on machine parts to castings, right? Casting plus machining put and, transport, everything put together. My belief is that number is in the 30 to 40% range. And, it might be somewhere in the 25 to 30% range for maybe some of the smaller, higher volume products. But that's my understanding. I think China, if there is an additional 20% tariff that's put on, I believe that we would be, highly competitive, maybe a better price than even China.
Okay. Understood. Thanks for these clarifications, and all the best. Get back into for further questions.
Thank you, Vidit.
Thank you. We take the next question from the line of Anusha Singh from Equity Capital. Please go ahead.
Hi, am I audible?
Yeah, Anusha, you're audible.
My first question to you is, since we currently have machining work done by craftsmen, are there any future plans to bring this in-house?
At the moment, no, there are no any significant investments that we are going to make into machining. We do have multiple vendors, and including the one that you mentioned, that we have great relationships with and that are, have been very reliable partners for us. So at the moment, we do not see that as one of our priorities, given what we believe the next 2-3 years hold for us in terms of opportunity, and we do not want to lose focus on the opportunity we have ahead.
Okay. And my second question would be, are there any new customer wins on the export side that you can share with us?
Yeah. So one of those is that particular product range that I talked about. So there's which goes into the tractor segment. But overall, I think what we have won in terms of new business in the last 3 months or last 3.5 months or so is something in the range of maybe about $30 million or so of new business. So and there's a lot more that is under discussion and under quite serious discussion. So it makes us very, very optimistic for the future. And the pipeline that's going to be there, we believe the next 2-3 years will have significant growth that will happen both in export and domestic. And we're gearing up for that.
All right. Thank you, sir, and all the best.
Thank you.
Thank you. Participants who wish to ask questions may please press star and 1 at this time. Next question is from the line of Riya Mehta from Malabar Investments. Please go ahead.
Hello. Thanks for the opportunity. Yeah, hi. Thank you for the opportunity. So my question is, what are the new orders which are under development, and can you share the competitive background of the same?
Yeah. So I think the positive thing is a lot of the new products that we are developing are more complex products, that are either heavier in weight, larger in size, or have some degree of, complexity to it. A lot of this actually is coming from the off-highway sector. I would say more than 50% of our new orders right now that we are working on are coming from the off-highway, which, if you look either in the US or in Europe, they will categorize even tractor as off-highway, right? So I'm using that same categorization. Come into the off-highway sector, which I think is quite different from what we have seen in the past. Right? In the past, our biggest growth has come from the medium and heavy commercial vehicle, even for the export. And then we've made some inroads into the light vehicle space as well. So now I think it's a good diversification that's happening as well into our export order mix.
Okay. So one more question. During FY'26, what will be the utilization at Peda Pariya plant, and can you give the rate on same?
You mean in FY'25?
26 means in FY'26. What will be the utilization in the next year? What we are expecting?
Yeah. So we believe that number will be higher than where we are today. So that number will be around 40% is where we expect to exit for Peda Pariya utilization. And we are hoping that we've got a good pipeline of orders. FY'27 we'll be targeting to actually get beyond 60%.
Okay. Thank you so much, sir. Thank you. That's all from my side. Thank you.
Thank you. Next question is from the line of Karthik VK from Suyash Advisors. Please go ahead.
Good morning, Deepak. Thanks for the inputs. A couple of clarifications. One is, have you been able to explicitly discuss tariff pass-through with your customers, and if you can share their mindset? And I'll also ask you the second question. You can answer both. Outside of USA, how is the competitive dynamic developing? Has that increased by any chance because of whatever is happening in USA? Some clarifications will help.
Yeah. So on the first one, in terms of the tariffs, there have not actually been any serious discussions with customers. If you look at how the tariffs are put in, they are intended to be for passenger cars as well as light trucks. Right? If you look at our business, a very small portion of our business is in the light truck space. We are more in the heavy truck space. So those are more subject to, the reciprocal tariffs that are there, which are, currently on hold for 90 days and at a lower, 10%. But even that 10% has not yet become applicable because that's applicable for shipments that have sailed past the 9th of April. So we'll see how that part of it pans out. But at the moment, we're not really seeing anything from our customers coming back to us to share the pain or anything like that at the moment. We're not seeing that. But this is something I think, as I mentioned in my opening remarks, that we do see as a pass-through. It's going to be quite...
I heard your opinions on one of the webinars as well.
That's right.
Yes. Yeah. But I was just trying to understand if anyone has spoken to you specifically. That's really what I was trying to understand.
No, nobody. It's not been specific because I think perhaps those conversations might happen in the next month, but so far no.
Sure. And outside of USA, have you seen competitive intensity increasing? Have you heard anything, felt anything? That would be more interesting because it seems...
Not really. I think the Chinese are actually quite active in terms of and have been aggressive for a while in Europe, which is our other big market. I think that's a fairly... we're not seeing anything drastically change in the last few months. I think people are just trying to avoid making any drastic decisions, especially in these 90 days or so.
Sure. Just to get one thing right, so any program that you work for, you will be assured of a certain amount of business, at least for the life of the program, right? You can't have lateral people being brought in through the program, right, in the middle of the program. Is that a reasonable thing to remember?
Typically, there's two ways to look at it. One way to look at it is it's actually very expensive for customers to do, product level testing and validation. So unless there is a really, really large, cost differential that's there, it's just not worthwhile for them to even think about it. So that's one side of it, right? So it's the motivation part of it. The second part of it is, I think, in terms of agreements and contracts that are there. With some of the customers, we do have contracts that assure us a certain percentage of business, which might even be 100%. And with some customers, while we don't have that contract, we believe it's very unlikely that they try to resource the business, given that it's quite expensive for them to test and validate and approve, and at the same time, we don't believe it will be worth their while because we don't believe there'll be significant cost savings coming out of it.
Sure. If you'll allow me one last question, and then I'll get back in the queue.
Sure.
At Peddapariya, what would be the profitability level, let's say 40% utilization and 60% utilization?
I think that's a little of a hypothetical question, given that the product mix is quite different, and we are adding quite a bit of this off-highway product mix into that plant. But I think we would be very, very happy to be at the 60%. But it will definitely have quite a bit of positive impact on the overall company. That's 60% for sure.
Fair. Thanks for answering, and very best wishes.
Thank you.
Thank you. Next question is from the line of Ankur Kumar from Alpha Capital. Please go ahead.
Hello, sir. Congrats for a strong set of numbers. Sir, my first question is on the export side. So we did 445 crore of export in this year, which you said is largely flat. So what is the outlook for FY'26? How much of total export sales can you expect?
So what we are seeing is, if you look at what the picture looks like, we're seeing relative stability in spite of all this noise that we're hearing. The scheduling that we're receiving from our customers seems to be reasonably flat, right? There's no great excitement either up or down in terms of the numbers. So we expect, the first half of the year to be largely in line with FY'25, right? So we don't really see that in the current quarter or the next quarter that there will be any kind of big spikes in terms of export volumes. But then I think as we come into the third and fourth quarter, as our new product development happens and the ramp up happens on that, we will see growth. The pace of the ramp up will determine the growth, but it's a little harder to comment on it, but we do expect to see fairly solid growth in the second half, perhaps more so in the fourth quarter. But it will be a ramp-up stage, and some of that will determine on whether our customer, their projects are on time or delayed and all of that. So a little harder to project that, but we do expect to kind of make the next jump in exports and in a gradual way, and that will start during the second half, more so in the fourth quarter.
Got it. And sir, on this EBITDA per kg thing, if I look at slide number 4, export was a similar number in second quarter also. But our EBITDA was 11.8 rupees per kg, which was largely similar for last 4 quarters. But this has jumped quite substantially to this quarter. Can you comment why has that happened in increase of so much?
Yeah, so I think actually, if you look at third quarter, that was, I think, a little bit of a lull, right? I think that was mainly because of U.S. elections. Otherwise, we would have so a little bit more, wait and watch happening. The inventory levels of in automotive kind of ballooning up a little bit in terms of the finished goods that the OEs were carrying. So they cut their productions in the third quarter because of that. I think fourth quarter has been a little bit of a return to normalcy. We have not really seen anything change in terms of we've not really seen anything change right now either into the first quarter, but time will tell. If you look at from a production standpoint overall also, the production quantity compared to the second quarter was around 22,000 and in fourth quarter was around more than 23,000. So there was some overall increase in production as well that did happen in the fourth quarter. And then there's, of course, also a few effects of raw material as well as I think the second quarter was also when we had, peak freight costs as well that were there.
Sure, sir. Thank you and all those.
Thank you. We take the next question from the line of Raman KV from Sequent Investments. Please go ahead.
Hello, sir. I just have 2 follow-up questions. So in the PPT, you mentioned that you will be shifting from manual molding to fully automated, and there will be some debottlenecking across the plant.
Mr. Raman, there's some background noise. I'm not able to hear you again.
A minute. So,
yeah, I think this is better now.
So in the PPT, you mentioned that you will be shifting from manual molding to fully automated molding, and there will be some bottlenecking across the plant. What will be the cost incurred for the bottlenecking and shifting from manual to automation during this year?
So actually, we've just completed all our projects of shifting from manual to automated. So that's all of that is already completed now. In terms of debottlenecking, there will be investments that will be more specific to new business wins and for better material handling and things like that. Overall, I think over the next over this FY'26 and FY'27, I think we expect that from a capex standpoint, we'll be roughly at the rate of depreciation, right? So depreciation, I think, is about 24-25 crores a year. So roughly, that's what we expect that we will be investing in this in the next year until we get to that 80%-ish capacity utilization.
Oh, okay, sir. And sir, with respect to the 3 plants which we have, you said the Penny plant is at 40% utilization. You expect it to go to 60%. And what about the
Paria plant?
Sir?
The Paria plant.
Yeah. And sir, what about the remaining 2 plants? What's the capacity utilization and what's your expectations for the coming year?
Yeah, so our Poneri plant is actually currently operating close to 90%. And our Gudur plant is operating at about 55%.
So basically, we are lagging in Paria and the Gudur plant, right?
Yeah, that's correct.
Okay, sir. Thank you.
Thank you. Participants who wish to ask questions may please press star and 1 at this time. I repeat, to ask a question, please press star and 1 now. Next question is from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Yeah. Namaskar, Deepak ji. Namaskar, Shiva sir. And firstly, sir, congratulations to the team for a very strong set of financial and operational numbers. Sir, if you could firstly give some more color, as Deepak ji, you were mentioning about some lower input cost also factoring in for Q4. If you could just give us some understanding what led to us posting this 14.8 rupees per kg EBITDA per kg, sir, the factors?
Yeah. So I think we saw fairly, stable input costs, only, small difference that's there. I think the other one that we saw was in terms of the growth in export side. So I think we had a very good product mix actually that was there in Q4. And I think overall the production also was exceeded 23,000 tons. So I think that also has. So I think overall really, positive quarter with, I think, better utilization, good exports, good product mix. Slight raw material, nothing serious. But yeah, I think overall, fairly good quarter that way.
Okay. So it was totally an operational performance with higher tonnage. I think so 23,600 you mentioned for Q4?
Yeah, 23,100 actually.
23,100. So we did 83,600 in totality. So Q4 was exhibited the highest tonnage.
That's correct, yes.
Okay. And sir, factoring into, I think so the current domestic preparation, we heard other players also, they're mentioning that from the MHCV segment, there are a lot of preparations or the order booking is very strong. So are we also getting the same filler in terms of the MHCV segment supporting the execution going ahead? And also, sir, in terms of 23,100 as the base and you guiding for a 20% growth in tonnage, what should be the expected trend for the first half and the second half? If you could give us some color of how the tonnages would be going ahead?
Yeah. So first question was on the MNHCV side, right? We are actually seeing fairly good positive signs on the MNHCV. If you look at April and at least, until the first half of May. So typically, if you look at, from a annualized standpoint, the April, May, June is usually when the MNHCV is at the slowest, and Jan, Feb, March is when it typically peaks out. So we are seeing reasonably strong MNHCV numbers even in April and May. So we are hopeful that this will continue through the year. And if it does, then I think certainly that's part of why we believe that MNHCV will help drive some of those volume growth. The tractor also seems to be fairly strong if you compare it with last year so far. But I think the tractor sales can be highly volatile and very concentrated during the festival season. So it's a little harder to put a finger on what will look like over there. I think the other part of it is, of course, as I mentioned, the new product developments and the export growth that we are expecting in the second half. We think this should push us beyond the 100,000 tons this year from the 83,600 tons or so that we've done in the past year.
And to the second question, sir, how should the tonnage be going ahead for, if you could give us some color, because there are a lot of vagaries. And also, sir, you pointed out that closer to 15 rupees would be our target for FY'27. So with closing for this quarter at 14.8, but we are already there at the vicinity. So why are we taking another 1 year to exhibit the same? That means there would be a declining per EBITDA per kg for the time period ahead. But what are we trying to explain when we are giving the hurdle timeline of FY'27 to achieve this 15 rupees?
I think it's a little bit more about market volatility in terms of the margins that we're trying to consider. Also a little bit of understanding of maybe raw material prices and what that impact might be. But I think more than anything else, you were asking about the volume. I think typically it's fair to assume that it will be about maybe 45, a little over 45% will be in the first half and maybe about 55 in the second half, right? This is, I think, a fairly normal kind of a thing in terms of what we typically would see in a year, about 45% in the H1 and 55% in H2. Given that M&HCV will peak out a little bit more in H2 and is a bigger portion of our sales than the tractor, which peaks out in H1 and typically mid third quarter.
Right, sir. And your comment on this 15 rupees part when you are...
Sorry to interrupt, but maybe please request you to return to the queue for follow-up questions. There are several other participants waiting.
Yeah, definitely. I will honor that, but just the concluding remark from sir, and then I hope I've given an opportunity again.
Yeah, I think it's more about market volatility and raw material prices. We're just trying to be a little watchful of that.
Okay, Deepakji. I'm joining the queue. I hope given an opportunity again before the call concludes. Thank you.
Thank you. We take the next question from the line of Ajit Sethi from Eco Quantum Solutions. Please go ahead.
Yeah, thank you for the opportunity. I just had one question. Can we expect optimum capacity utilization by FY'27?
Yeah, I think certainly that's what we believe. And with the business pipeline as well, I think the business side will support. I think the operational side also will be there, right? So we believe that we should be, close to that 80% target that we have for the capacity utilization.
Thank you.
Thank you. Next question is from the line of Soham from RV Investments. Please go ahead.
Thank you, sir. Am I audible?
Yes, you're audible, sir.
Sir, if you can help me understand the margin differences between exports and domestic.
So it's not obviously it's very different depending on the product of domestic versus export. But I mean, by and large, as a guideline, I think we can say that domestic is maybe somewhere around 10 rupees a kg, and export is closer to around 20. Obviously, there are exceptions to that in both directions.
Okay, sir. And that is more of a product mix thing. If you could quantify the orders you have in hand right now, or the order book or inflows you are getting right now.
Yeah. So I think if you look at the way that it works is we typically will have an open order book, open purchase order from the customer, and they give us, what they give as their schedules of forecast, and with a much shorter firm period. So based on current schedules, we are seeing, I think, we believe that Q1 and it should be largely in line with Q4, right, in terms of the number of volumes. That's what we're seeing as of now. But of course, given that it's schedule based and there are no, orders that are far out, it's all subject to change.
Okay, sir, understood. And you just said that we should be aiming for optimum utilization by FY'27. So when would we require that 50,000 brownfield we have a potential at our existing plants, which you have mentioned in your presentation? When we should be requiring that?
So I think we'll look at that. Probably we might require that for maybe FY'28 or so is what we think. So we'll look at that maybe in the latter half of FY'27.
Okay, sir. Thank you.
Thank you. Next question is from the line of Shubham Zope from Sycamore Advisors. Please go ahead.
Yeah, thank you for the opportunity. Congratulations on the good set of numbers. So my first question is that, in your previous on calls, we mentioned that the update on the Europe, that some clients have visited our plant and the meaningful deliveries for Europe will happen in FY'27. I just wanted to know that given the global uncertainty now happening, is there any change in that, or is there any opportunity to increase our exposure in Europe? That is my first question.
Yeah, so I don't think that the US is really not a significant supplier of castings into Europe. So at least in the casting space, we don't really see that this will have any real impact that's happening because of US tariffs or anything else like that. I think the bigger change is really coming out of, the structure within Europe in terms of, potentially some bankruptcies or something like that. That being said, I think we've gone through in the last year, we've really, gone through a part where we've started meeting customers, building relationships. They've come visited us. Now they've kind of gone to the next level, which is actually having our facility audited and approved into their list of approved suppliers, right? So that is what is currently going on, and perhaps we expect the next few months, maybe the next 6 months or so, we'll have a lot of that happening. Once that's there are absolutely no barriers for them to actually release orders to us for developing new parts. So we believe we hope that those orders will come through by the end of the year for product development, and then given testing timelines and all of that, probably mid next year or so into actual getting into production. And then obviously when you win a few and you do well, you win a lot more, and so we're quite sure that will grow quite significantly on the basis of performance.
Okay, thank you. And my second question is that, so as per your press release which you gave yesterday on the exchanges, you are expecting that your FY'26 revenue will be grown at around 10 to 15% as compared to FY'25. And as in your Concall you mentioned, and also in previous Concall you mentioned that you are expecting a tonnage growth of 20%. So are we expecting a realization decrease in next year? Because as per our understanding that generally we are targeting a high value end product which will have a high realization. So I just wanted to get your context on that.
So I think it's just more about being, I think raw material prices can have significant effect. And given the trade war that's currently happening, there's a lot of uncertainty on raw material prices. So I think, in terms of top line, that's the only reason that we kind of consider it a little bit on the lower side, considering potentially maybe what might be the worst case scenario of raw material prices into revenue.
Okay, thank you so much. I'll go back to the queue.
Thank you. We take the next question from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yeah, thank you, sir, once again for the opportunity. Sir, just a second. So we have seen our capital work in progress being capitalized closer to 40-45 crores. So if you could, in fact, for the consolidated level, it is closer to 53 crores. So if you could just give some explanation what has led and which are the projects that got capitalized for the period ending March 25.
Yeah. So the big one that we capitalized was at our Poneri plant. We had done the modernization of the second line. So that was the big project that we had done over there. And that's what was capitalized. It was I think that's what you're referring to in the standalone, right?
Okay. So this modernization will lead to have more efficiency and thereby contributing to the bottom line. That is what the summing substance.
Yeah. So the biggest effect of this is going to give us a better product mix, because the current, if you see, we had one automated line and then there was a manual line that was hardly used in Poneri. So it limited what we could do in terms of our exports from Poneri. So almost all of our exports were driven purely by the Gurur plant. Now with this, we believe that there will be significant ramp up of opportunities in terms of export for the Poneri plant as well.
Okay. And sir, for the year as a whole, you mentioned that tonnage growth of 20%, so we might be hitting the 1 lakh number or slightly above than that. What should be the contribution of export from the total? I think the 440 was the number, 445 was the number for FY'25, sir? What should be penciling in terms of export contribution to the total pie for FY'26?
So I think export will maybe be slightly more, right? So we're currently at about a 36-ish%, 35-36% number in terms of percentage of revenue. we expect there'll be some small increase in that. So it will still be somewhere in that 35 to 40%. But I think we'll start to see towards Q4 that there will be, much greater growth in exports. I think that's our expectation. Hard to put a number right now because of the new product launches and the ramp up, which has degree of uncertainty to it. But we believe we should be in quite a good exit velocity.
Okay, sir. Sir, the line item for finance cost, this line item has remained always on the increasing trend. So, what is the thought process of the management in terms of, is it the increased business volume that will commensurate to this higher increase in finance cost, or how should we look at it, this number now? This is closer to 10 crore on a quarterly basis.
Yeah. So I think in terms of finance costs, I think some of it is driven mainly by working capital. And, as the growth happens, there will be some increase that will be there in working capital. However, we do intend to reduce what our term loans are as we pay them off. So I think overall, we'd like to keep it fairly stable, not have much of a change to that number.
Sir, I didn't get absolute number or as a percentage of the profits. What should be factored in, sir?
So ideally, I'd like to, as an absolute number, I'd like to keep it as constant as possible. But I mean, recognizing the fact that the sales growth happens quite significantly, that there will be some increase in working capital, right? But we will also parallelly be reducing our long-term debt as well. So I think as an absolute number, our goal will be to keep it somewhat similar in the same ballpark as where we are.
Okay. Only two small points, and I'll join the queue. Firstly, sir, do we see this a secular trend in the casting business, not only pertaining to Nelcast developing this complex product of 500 kgs, or there is a secular change in the casting segment altogether, wherein we are seeing disproportionate opportunity both in the domestic and the export market, or is it only curtailed to us having developed that product profile, especially I think so for the Petcoria unit, which we are harping on going ahead. If you could just outline to us the basis or the genesis of this improved performance, whether there is a significant change in the underlying casting business altogether for the industry as a whole.
Yeah. So I mean, I think there are opportunities for the industry as a whole. I think I think we've got some better opportunities than the industry, mainly because of the Petcoria plant, and while it has been a challenge over the last 4.5 years or so, I think we believe that we're now at the stage where we see the light at the end of the tunnel. So that's something that we are quite excited about, giving us some new opportunities with better realizations. But as an overall, I think there are opportunities for everyone in the industry.
Okay, sir. Thanks again to the team. And also, sir, we have proposed to increase the dividend payout also. That also is gives confidence to the investing community on your approach towards your shareholders. So I congratulate the board for upping up the dividend payout also. And lastly, sir, when you mentioned 14.8, what I am trying to understand is 14.8 per kg for the quarter 4 is not of a one-off item. It is all the operational base. It is all the higher tonnage, better absorption of cost, and hence the flow to the profitability. And for an average of 12.6, depending upon what the conditions are today, we should be in a very good position to be higher than this average number for this financial year. Although we are very nascent, just quarter 1 is only 45 days, but taking into account the background or the setup we have for the industry, we should be penciling in at a higher EBITDA per kg for this year also. This should not be a one-off. That is what my thought process was.
That is what we're working for, and I think the product mix I think was quite good in Q4. Between the mix of also tractors being a little bit lower, commercial vehicles being a little higher, exports being quite strong. Obviously, the product mix is not the same in this quarter, but we will certainly aim aim to do well on the EBITDA front.
Okay, sir. Thank you, sir, and all the best to the team, sir. Thank you.
Thank you. Participants who wish to ask questions may please press star and 1 at this time. I repeat, to ask a question, please press star and 1 now. We take the next question from the line of Ankur Kumar from Alpha Capital. Please go ahead.
Hello, sir. Thank you for the follow-up. Sir, I wanted to know, in terms of export CV and tractors, what is roughly our EBITDA per kg for all the 3 segments?
So we don't actually, track it that way. So we track it very differently in terms of how we track it. But like I said, largely speaking, I think you can say export is roughly around 18 to 20, and domestic is roughly around 10. It varies quite a bit based on product and product mix and size of the product that we do. So it's a little hard to we look at it quite differently in terms of product families or customers, not in terms of the overall segment.
And in domestic, tractor is lower than CV, sir?
Yeah, tractor is a little more competitive than the CV. Both are very competitive, but because tractor has what we supply to the tractor has much more of gray iron in it versus what we supply to CV is more of ductile iron to it. So there is some technical differences as well that result in lower realizations.
Got it. And export is much higher. So if our export share can increase, then our EBITDA per ton can go to higher.
Yeah.
Yeah, sure, sir. Thank you and all the best.
Thank you. Next question is from the line of Nirmal Shah from Seraphic Management. Please go ahead.
Yeah, good afternoon, Mr. Deepak. Congratulations for a very good set of results. I had just 2 questions. One was with respect to the current uncertainty in terms of tariffs. Typically in this kind of environment, the clients just hold back or they go slow. But probably you have actually got quite a lot of good contracts. So I was just trying to understand more behind that thought process. Can you just give me some more color on this?
So I think, the order wins I think it's based on 2 things, right? One, if somebody has a new project that's happening, they are not delaying the timelines of the new project, right? So I think there's a firm belief that, the tariff war will likely have a negotiated tariff rate. And, the reality is even if that tariff rate is 10% or whatever, it doesn't really alter their decisions. So we are seeing, people still move forward, especially when it's new projects. When it comes to projects that are, resourcing as well, they still believe that a deal will be reached and something will get sorted out. There may be a little bit more of a wait and watch, unless even with whatever their worst case scenario tariff, they still believe that there's a significant cost saving, which I still believe still does exist. The other part of it is the capacity really does not exist in the US to be manufacturing these kind of products. To invest in new capacity is going to take a minimum of 3 years and a significant investment, maybe another couple of years to break even, maybe another 5-7 years to earn your return on investment. So given that, I don't foresee that anybody would actually invest in a new facility with the hope that these tariffs will still be around in 12 years from now or will be higher 12 years from now. So I think there's a lot of, while there might be some uncertainty, I think those customers who have new projects and new products that they want to launch do not see the point of delaying the launch of their products and are making what they believe is a calculated call right now.
Got it. And the last question is, what would be the size of the framework contract size annually for you? Like you mentioned, $30 million number. Is it cumulative or is it annual number of all new order wins here?
That is the annual number.
Okay. So that 30.
It goes into production. They would all go into production, perhaps at different projects at different times.
Right. But then once it goes into production, annually, there is an additional $30 million worth of additional contracts you won post-December quarter.
Correct.
Okay, got it. And how does it look like in future, sir?
We've got a lot more we're working on. Let's hope that they materialize.
Okay. All the best, sir. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. P. Deepak for closing comments.
Thank you, Navya. In closing, I want to reiterate our commitment to excellence and our focus on delivering long-term value to all our stakeholders. The resilience we have shown in the face of market fluctuations, I think, is a clear indication of the strength and stability of our business. We're not just navigating through a temporary movement in demand, but we're actively preparing for a future that's filled with promise and potential. Thank you.
On behalf of Nelcast Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.